Whether you're an investor or simply interested in what the stock market is doing, our next guest can help make sense of the ups and downs on Wall Street. We'd like to welcome David Monckton, certified financial planner and advisor with Carolina's Wealth Management. Thanks for joining us.
Thank you.
So I've got a two-parter here. We're seeing the Delta variant having an impact on Wall Street, on the stock market, which is impacting futures. Those are trending lower. Can you kind of explain the philosophy behind this?
Sure. The market is predicated on companies earning more and more money each and every year that goes by. And anything that affects that, we've seen it earlier this year with inflation. Anybody that's out there trying to build a home or consume appliances or whatever the case may be, things are costing more. With the Delta variant, if it's slowing things down, if people aren't working, if they're not able to earn what they were used to earning and spend those funds where companies would then make profits, it affects the market.
Right. And now we're seeing those $300 checks that people were getting. Those were taken away last week. Now people are being forced to go back to work.
Sure.
So we have all these jobs with no one to work in them. What do we foresee then? I mean, yeah, you mentioned inflation. I want to get into that a little bit more. But do you see that people getting back to work is going to show any improvement by the time
it should.
December 31st?
It should. As people get back to work, and in theory they're going to be earning more then than they are now with the unemployment checks, there should be more money moving through the system, which means companies are selling more goods and services, which should help their earnings, which has a positive impact on the stock market.
And then inflation, if we can touch on that a little bit more, because obviously, yes, things are costing more. People who want to build homes, wood is costing a lot. I mean, everything just seems to be costing more. So what do you foresee the trend to be? Have we reached near peak?
That's a great question. No one knows the answer to that. When you think back earlier this year, you mentioned lumber. Lumber costs soared. They've come back down. The stock market is a big environment of supply and demand. And the more demand we have for stocks, the higher the prices are going to go. Over the last 5 months, we've seen more money go into the stock market than we did the prior 12 years combined. So when there's more and more money chasing a finite number of stocks, that's when we see the stock prices go up. Now, it's not just supply and demand. Also, those companies have to then provide investors earnings that are consistent and growing for people to be encouraged to buy those stocks.
I see.
I tell folks to think about your community. You know, we're all familiar with real estate. If you're selling your home in a neighborhood and there are 100 people that want to buy the home and it's the only one for sale, you're going to get a great price. If there are 100 homes in the neighborhood and only one person wants to come in and buy it, you're not going to get as good a price. So the market is fueled by supply and demand.
And there's two sides to the coin when we're talking about the economy. It can be quite resilient in some circumstances. It can be very fragile in others. We lived through the subprime fiasco more than a decade ago. With what's happening now because of the pandemic, because of this Delta variant, the other variant that is now on its heels, are we seeing any kind of fragility in the future like we saw during the Great Recession?
Now, there are a lot of people out there that are predicting the market to drop significantly, but people have been doing that for 14 years. It's been that long since the market really pulled back. And
there's a lot of bears out there.
Yeah, there are, and I'm glad you mentioned the Great Recession. People that held on to their portfolios that were suitable for them throughout that crisis are much better off today than folks that made some emotional or knee-jerk reactions. What we tell people is don't panic. No one knows what the market's going to do. So if we go in there and we understand what our risk tolerance is, we understand what we need our assets to do for us, and number one, how comfortable we are with how they're allocated, we're then in a much better position to go through what we're going through now, which is uncertainty. You know, the tail risk or the big threats we've seen to the market have been inflation, which I think that is somewhat tamped down, and then you mentioned the variant or others to come.
Yeah, exactly.
I mentioned before that if the market shuts down and people aren't going out to work, they're not going to buy dinner or goods and services, the market's not going to do well. So we don't know what's going to happen there, but number one is don't panic. Understand what your investments, how they're allocated, and, you know, get with a financial professional, make sure you understand your risk tolerance. And then reassess. You know, the market has done so well the last 10 years. Maybe you've got more in equity investments or stock investments than you should. So reassess or rebalance. And then lastly, we need to control what we can control. Nobody can control the stock market, but we can control the amount of debt we put on ourselves.
I was going to say savings, yeah.
Yeah, we can control how much we put into savings. One thing that's somewhat difficult or depressing to talk about is we owe $30 trillion as a country.
Yes, and counting.
And counting. It's projected to be 40 in the next decade. So what that tells us is taxes are going to be higher. And you need to make sure you're speaking with your financial professional to make sure that what you're doing today from an investment standpoint doesn't put you in a position 10, 20, 30 years down the road in retirement where you're paying more in taxes than otherwise you would have.
That's true. Well, I want to take a break here. When we come back, I want to talk about two different types of investors, the seasoned one and the new one. So the one who's new to the game. So we'll talk about that in 2 minutes. Don't go anywhere. We are back with David Monckton. He is Certified Financial Advisor with Carolina's Wealth Management. And we've been talking about Wall Street and just those ups and downs that we hear about all the time. Gets a lot of people's adrenaline going. But I did want to talk about the two different types of investors that are out there. One, the seasoned investor who's got the portfolio, and the one who's wanting to maybe make some inroads into an untapped source of potential income. So what would you advise for someone who already has a portfolio that wants to add or subtract to it?
I think the folks that are already out there, and when I think of that, I think of people in retirement. We were talking about volatility earlier. Regardless of what your portfolio looks like, there needs to be assets in areas that aren't going to go down if we do have an unforeseen event with the market, because you never want to be in a position where you have to sell equities when they're down in value. So we tell our retired clients that we want to have anywhere from 3 to 6 years in cash equivalents or lower volatile assets, so we don't ever have to sell when the market's up. With the younger investors, which really excite me because they're not in there yet, we tell them whatever they can put away for the future, do it today. It's never more expensive for retirement than to wait a day, a week, a month, or a year. And
something that sounds very sexy to a lot of young investors is the whole idea of cryptocurrency. What are your thoughts on cryptocurrency?
I think that I hate to bring up the tulip craze of a couple hundred years ago, but cryptocurrency, it didn't exist 12 years ago. The total value of all cryptos now is about $2 trillion, and they're only worth what someone else is willing to pay for them. There is no underlying value, and when we're looking at investments for our clients, if we can't figure out an intrinsic value of that stock or bond or mutual fund, we're not going to recommend it. And when we look at a Bitcoin or Ethereum or whatever the next 50 of them are going to be coming up, if we can't quantify a value, we're just not comfortable with them.
Right. Sounds good to me. Well, thank you so much for joining us.
Sure,
and for anybody who's interested in more information in your services, where do they go?
We are online at Carolina's Wealth Management. We've got an office right here off Long Point Road, and we're here to educate as many people as we can. And it's real important to understand that no matter if you're a seasoned investor or someone just getting into it, to have a plan. If you've got a plan for where you're going, you've got a much better chance of getting there.
Absolutely. Sounds great. Thank you very much, David.
Thank you.
Back after this.